Welcome to Griffonomics.
It is good to be back.
So let's set the scene. Today is February 16, 2026, and we're looking at a world where defense and space exploration they're not just intersecting anymore, they're colliding.
They really are, and it's happening in a way that sounds like something straight out of science fiction.
It really does.
Yeah.
But as we're going to find out, this isn't fiction. It's a very specific, very calculated business strategy. We're talking about a company that seems to have its hands in everything from, growing crystals in microgravity to hunting tanks on the Eastern Front.
It's a fascinating case study in convergence. We are seeing the lines between up there in orbit and down here on the battlefield completely blur. It used to be that space was for looking and the ground was for shooting.
Right. Two totally separate domains.
Exactly. And that distinction is it's evaporating.
So today, we are doing a deep dive on Redwire Corporation, ticker symbol RDW. And I want you, the listener, to just try and picture this. Imagine a company that builds the solar panels for the International Space Station. I mean, the actual power source that keeps the lights on for astronauts.
The mission-critical hardware.
The most critical hardware. And then, in the same breath, that same company manufactures the combat drones that are currently being used on the front lines in Ukraine. It's a weird mix, isn't it?
It sounds like a paradox on the surface.
It feels like two different companies just got glued together.
Or maybe a company that can't make up its mind. But that is exactly what makes Redwire such a compelling subject for this deep dive. Our goal today is to generate a really granular investigative report on this transformation, because Redwire isn't just a space company anymore.
Not by a long shot.
No. If you still think of them as the guys who just make satellite parts, you're missing half the story.
Right, and that's the mission of this deep dive. We're looking at a company that is attempting a massive, and I mean massive, pivot.
A strategic inflection point.
There you go. They are trying to go from being what you'd call a picks and shovels vendor, selling the parts, the sensors, the solar arrays, to becoming a prime contractor.
They want to sell the whole mission.
Not just the lug nuts.
Exactly. And to understand if they can actually pull this off, we have combed through a massive stack of sources. We have their Q3 2025 financial filings, the 10Qs, the earnings transcripts, internal investor presentations.
And a lot of reports on military contracts, right?
Oh, yes. Specific reports involving DARPA, the European Space Agency, and critically, actual deployments in Ukraine. We are looking at the raw data, not just the glossy press releases. We need to separate the hype from the hardware.
Okay, so before we get into the weeds, and we are definitely going to get deep into the weeds, what's the so what here? Why should the listener, our learner, care about some mid-cap space stock? Is this just for the space nerds?
Not at all. I mean, it is for them too, but this isn't just about rockets or stock tickers. This is about a new military doctrine called the connected battle space.
Okay, I've heard that term. Unpack it for us.
It's the idea that space assets and air assets, satellites and drones, are no longer separate worlds. They are becoming one integrated, intelligent network.
So the satellite talks to the drone directly.
Without a human in the loop. And if Redwire succeeds, they are positioning themselves as the backbone of that network. But, and this is a big but, the financial realities of Q3 2025 show that this transition is messy. It's expensive, and it's very, very risky.
Okay, that's the roadmap. We're going to cover the business model shift, this concept of an orbital drone.
But
let's call them messy financials and the risk of your shares getting diluted into oblivion. But let's start at the beginning. Section 1, the transformation. Redwire wasn't exactly born in a garage like Apple or Amazon, were they?
No, not at all. There's no classic startup story here.
So where did they come from?
Redwire is a classic example of a roll-up strategy. It was assembled, almost manufactured, by a private equity firm called AE Industrial Partners.
AE Industrial, I know them. They're big in aerospace and defense.
Very big. And they looked at the space industry around 2020 and saw a structural problem. You had the massive giants, the prime Lockheed Martin, Northrop Grumman, Boeing, and then you had hundreds of tiny venture-backed startups with great ideas but no scale.
It was a barbell economy. You had huge on one side, tiny on the other, and absolutely nothing in the middle.
Precisely. There was no middle class. So AE Industrial Partners decided to manufacture one. They went on a shopping spree. They bought up these highly specialized family-owned or founder-led companies, Adcol Space, Deep Space Systems, Maiden Space, half a dozen others, and they smashed them all together to form Redwire.
It was a financial engineering play, at least initially.
It was. But they were smart about what they bought. These weren't just random companies. These were the absolute picks and shovels of the industry, the best of the best in their narrow little niches.
I was reading about their heritage, and it's pretty wild. They claim a 100% on-orbit success rate across all these legacy companies.
Which is, it's almost unheard of in space.
Right. I mean, usually the narrative in space is that things blow up, things fail. It's all about trial and error. SpaceX blows up rockets all the time just to learn. But Redwire's heritage companies make the stuff that cannot fail.
Think about what that means. We are talking about sun sensors and star trackers. These are the eyes and the inner ear of a satellite. If your star tracker fails, your billion-dollar satellite doesn't know which way is up.
It's just tumbling blind.
It can't point its antenna at Earth to send data. It can't point its solar panels at the sun to get power. It effectively becomes a very expensive piece of space junk in a matter of hours.
And you can't just send a mechanic up there.
You cannot iterate on a star tracker once it is in orbit. It either works flawlessly for 15 years or the mission dies on day one. There is no middle ground.
So they established themselves as the ultra-reliable plumbers of the space economy, the people you call when you absolutely positively need it to work.
Exactly. And their crown jewel in this era was the RSA, the rollout solar arrays.
Oh, right, the yoga mat solar panels.
That's the perfect way to describe it. If you look at pictures of the International Space Station today, or you look at the designs for the upcoming Lunar Gateway Station that'll orbit the moon,
The big new solar wing.
those massive solar wings that unroll like a yoga mat, that's Redwire technology. It's lighter, more compact, and more efficient than the old, rigid, accordion-style panels.
It solves the volume problem inside the rocket fairing, right? You can pack more power into a smaller space.
It does. It fundamentally changed how we power large space structures. So they have this solid, reliable, profitable business selling critical components.
Which brings us to the big question. Why change? Why risk this massive pivot when you're already the go-to guy for the sensors and the solar arrays? If I'm making good money selling the picks and shovels, why do I need the headache of running the whole gold mine?
Because of the margins and the scale. It's about moving up the value chain. Selling a sensor gets you, say, $50,000. It's a good sale.
Yeah.
Selling a full satellite mission gets you $50 million. They want to be a middle market prime. They want to sit right between the Lockheeds and the startups, offering full systems, but with more agility and speed than the lumbering giants.
So they don't want to just supply parts to Northrop Grumman anymore.
They want to compete with Northrop Grumman. They realize that if they just stayed a component supplier, they would always be getting their margins squeezed by the big guys. They wanted to be the ones calling the shots, owning the mission.
That makes perfect sense. It's the difference between selling tires and selling the car.
Correct. And that brings us to the catalyst, the big bang moment, the strategic inflection point. In June 2025, they closed a deal that completely changed the DNA of the company.
The acquisition of Edge Autonomy.
That's the word.
This was the moment that really confused me at first. I'm tracking this space company, I get their business, and then suddenly they're buying a drone manufacturer. It felt like it came out of left field.
This was the moment Redwire stopped being just a space company. Edge Autonomy makes high-performance unmanned aerial systems drones. By acquiring them, Redwire moved from space to space plus defense.
And this wasn't a small deal, was it? Not some little acqui-hire where you just buy a team of engineers.
Not at all. This deal added $49.5 million to their revenue in just one quarter.
Wow. That's massive. It effectively doubled their revenue overnight, practically.
It did. And it signaled to the market and to the Pentagon that they were deadly serious about this vertical integration strategy. They aren't just looking up anymore, they're looking down from orbit and across the battlefield.
So let's dive into Section 2 here, the Edge Autonomy acquisition and the drone wars. Because when I saw Redwire, I thought satellites. But suddenly we are talking about hardware that is on the ground, or rather in the air right now, in active combat zones.
It is a classic vertical integration play. The strategic rationale is that if you control the satellite looking down and you control the drone flying low, you control the entire data chain. You own the sensor and the shooter. But let's talk about the hardware for a minute because it is seriously impressive. This isn't hobbyist gear from Amazon.
Yeah, let's geek out on this for a second. The first big platform they got in the deal is the Stalker VXE-30. This thing sounds like it belongs in a spy movie.
It practically does. The Stalker is a VTL drone.
VTL meaning vertical takeoff and landing.
Right, so it takes off straight up like a helicopter. This means you don't need a runway. You can launch it from a tiny clearing in a forest, or the deck of a small ship, or even the back of a pickup truck.
Which is huge, because in a war zone, you rarely have a nice, clean, paved runway waiting for you.
Almost never. But the really clever part is that once it's up, it transitions to forward flight, flying like an airplane. So you get the efficiency of a fixed-wing aircraft for long flights, but the takeoff flexibility of a quadcopter.
Okay, that's a big tactical advantage. But the killer feature, literally and figuratively, is how it's powered. It's not just batteries.
No, it's not. It uses a solid oxide fuel cell.
Okay, so translate that for the operator in the field. What does that actually mean? How does that change the game compared to a normal battery-powered drone?
It means endurance. Unbelievable endurance. Most electric drones in this class give you 30, maybe 40 minutes of flight time before the battery dies.
Right, you're constantly landing, swapping batteries, sending it back up. It's a pain.
A huge pain. And it limits your range and your ability to watch a target continuously. The Stalker, with that fuel cell, can fly for 18-plus hours.
18 hours? Are you serious?
Over 18 hours. That's an eternity in drone time. You could launch it at sunset, and it's still flying over the target area at lunch the next day.
That's a different capability entirely. That's not just a quick peek.
It allows for what the military calls persistent surveillance. You can put an eye in the sky and just keep it there, all day, all night. And the other key feature, because it's fuel cell or battery powered, it is virtually silent.
Silence.
If you are flying a gas-powered drone, it sounds like a lawnmower engine in the sky. The enemy hears you coming from miles away. They take cover, they hide the equipment, they turn off the radios.
You lose the element of surprise.
Completely. The Stalker is designed to be a ghost. It can be right on top of you and you'd never know.
Yeah.
It is currently on the Department of Defense's blue list, which is a huge deal.
The blue list, that means it's fully vetted, right? Cybersecurity approved, made in the USA, ready for government purchase.
Exactly. It's a trusted platform. And even better, it's already a program of record for the U.S. Marine Corps.
And that's the golden ticket in defense contracting. Program of record means you're in the budget permanently. It's not a one-off experiment. It's a core capability they plan to use for years. That's a steady paycheck right there.
It is. But then there's the other drone family they acquired, the Penguin.
Right, the Penguin series. These are different.
Very different. These are manufactured in Latvia, which gives Redwire a crucial European footprint and makes them very popular with NATO allies. And unlike a lot of the defense tech coming out of Silicon Valley, that's all just PowerPoint slides and slick prototypes.
The Penguin has actually been to war.
It has serious combat heritage. The sources say over 200 Penguin aircraft have been delivered to the Ukraine armed forces.
And they're using them right now.
Yes, for long endurance, ISR intelligence, surveillance, and reconnaissance. And crucially, they are designed to operate in GPS-denied environments.
That is the big buzzword in defense right now. GPS denied. Can you explain what that actually looks like for the drone? Why is that such a massive hurdle?
Sure, modern electronic warfare is all about jamming. The Russians, for example, have very sophisticated systems that blast out powerful noise on the GPS frequencies.
So it's like trying to listen to the radio with someone screaming in your ear.
Perfect analogy. If your drone relies purely on GPS satellites to know where it is, that signal gets drowned out. The drone gets blinded, it thinks it's in the middle of the ocean or that it's 1970. It either drifts wildly off course or just gives up and crashes.
So how does the Penguin survive that? Does it have like a map and a compass?
In a way, yes, but a very advanced version. It uses advanced inertial navigation systems, gyroscopes and accelerometers, and something called visual odometry.
Visual odometry.
Essentially, it uses its cameras to look at the ground and track its movement relative to the terrain, completely independent of any satellite signals. It can navigate by sight, it looks at a river, a forest, a road, and compares it to preloaded maps to know exactly where it is.
That is critical. If your drone can't fly when the jamming starts, it's basically useless in a modern conflict.
Exactly. And this use in Ukraine validates the technology in the harshest testing ground on Earth. If it works there against top-tier Russian electronic warfare, it works anywhere.
But Redwire isn't just selling these drones individually, are they? They're integrating them. I saw this mothership concept they're rolling out with another company, RedCat.
You did. It's like a Russian nesting doll of doom.
So that's a good way to put it.
Essentially. They mount smaller, short-range Black Widow reconnaissance drones under the wing of the Stalker. So the Stalker, with its 18-hour endurance, flies out deep behind enemy lines. It acts as a carrier aircraft and a powerful communications relay.
And then it releases the little ones.
It releases the Black Widows to go investigate specific targets up close. The Stalker stays high and safe, maybe 5 miles away, just relaying the signal, while the cheap, expendable Black Widows go down into the danger zone to take a look inside a building or over a hill.
So the Stalker is the aircraft carrier, and the Black Widows are the fighter jets.
In a miniature robotic sense, yes.
Yeah.
And this kind of advanced capability is winning them new contracts. They just signed deals with the Croatian Border Patrol, which is part of Frontex, the EU's border agency, and with the Italian defense sector. They are expanding deeply into the NATO market.
Okay, so they have the deep space heritage, the sensors, the solar panels, the 100% success rate, and now they have these battle-tested, high-tech drones. Section 3 is where these two worlds crash into each other, the connected battle space and this thing called VLAO.
This is the grand vision. This is the synergy they're selling to investors and to the Pentagon. The military no longer sees air and space as separate domains. They want a joint all-domain command and control environment.
Right, JADC2, it's all you hear about.
Exactly. And the vision Redwire's pitching is this. A Redwire satellite in orbit detects a heat signature, maybe a missile launch, or a column of tanks starting their engines. It uses onboard AI to process that data right there on the satellite.
So it doesn't have to beam terabytes of raw data down to Earth first.
No, that's the key. No human bottleneck. Instead of sending the data down to a human analyst at a ground station who might be on a coffee break or working through a backlog.
Which takes time. And in missile defense, seconds are lives.
Right. Instead of that, the satellite directly cues a stalker drone that's already loitering in the area to go investigate, or even to provide targeting data for an attack. The machine-to-machine connection is almost instantaneous. Speed is the weapon.
And to do that effectively, to make that link work, they are betting heavily on something called VLEO, Very Low Earth Orbit. Now, I did not do well in physics, so help me out here. Why is VLEO different from just LEO, Low Earth Orbit?
It all comes down to altitude and atmosphere. LEO Low Earth Orbit is where the space station and Starlink satellites live. It's around 400 to 500 kilometers up. For all practical purposes, it's a vacuum.
Okay.
VLEO is much, much lower. You're skimming the very top of the atmosphere, somewhere around 250 to 300 kilometers up.
Okay, so you are a lot closer to the ground. Why risk skimming the atmosphere? That sounds dangerous for a spacecraft.
It is risky, but the physics give you two massive advantages, especially for military intelligence. One is resolution.
You just see a bit.
You see much better. Being that much closer means your cameras can see more detail without needing massive, expensive, Hubble-sized lenses. It's the difference between taking a photo from a balcony versus taking it from a commercial airplane at 30,000 feet. You just get clearer pictures.
So you get spy satellite quality images, but with a cheaper, smaller satellite.
That's the idea. And the second advantage is latency. Your signal has less distance to travel, so it gets up and down faster. In electronic warfare or hypersonic missile tracking, that split-second difference in data transmission matters.
But there's a catch, right? There has to be. Otherwise, everyone would be flying their satellites down there.
The catch is drag. At that altitude, there is just enough atmosphere, it's mostly stray molecules of atomic oxygen, to create friction and slow you down.
So it's like sticking your hand out of the car window.
Exactly. And over time, that drag causes the satellite to lose speed and altitude. Usually a satellite in VLAO would spiral down and run up in the atmosphere within weeks or months unless it carried a ton of fuel to constantly fire its thrusters to boost itself back up.
Which adds weight and cost and limits the mission life. So how is Redwire solving this? They can't just put a giant gas tank on a satellite.
They're building satellites that fly like planes. They have two main platforms, SabreSat, which is their U.S. offering, and Phantom, which is for the European market. These are not your typical boxy, foil-wrapped satellites. They're designed to be aerodynamic. They have a shape that helps them slice through that thin atmosphere to minimize drag.
In one of the investor decks, management was calling them orbital drones.
That is the perfect way to visualize it. It's a satellite that's in orbit, but it behaves aerodynamically to counteract drag. And this isn't just a drawing on a napkin or a cool animation. They are winning prime contracts for this technology right now.
Right, I have the list here. They're the prime contractor for the European Space Agency's SkimSat mission, which will use the Phantom platform.
A huge vote of confidence from ESA.
And then DARPA, the mad scientists of the Pentagon, gave them a $44 million contract for a mission called Otter, which will use the SabreSat platform.
And that DARPA contract is absolutely crucial. $44 million is real money, don't get me wrong. But the validation is worth even more. It proves that Redwire is successfully making that pivot.
From component seller to mission prime.
Exactly. They aren't just selling the solar panels for the satellite anymore. DARPA is trusting Redwire to build the bus, the main body, the chassis, and the engine of the spacecraft itself.
That validation is key. DARPA doesn't just hand out contracts for bad ideas. They fund the bleeding edge of the future. It is exciting stuff. I mean, it feels like the next frontier.
But, and you knew there was a but coming.
There's always a but.
We have to look at the bank account. Section 4, Financial Realities. Because we analyzed their Q3 2025 report, and while the technology is incredibly cool, the numbers are complicated.
Complicated is a very polite way to put it. Let's look at the headline numbers first, the ones you see on the surface. Revenue hit $103.4 million in Q3 2025, which sounds amazing. That is up 51% year over year. If I just read that headline on a finance app without any context, I'm thinking this is a hyper-growth tech stock, and I'm buying immediately.
And that is the trap. You absolutely have to look at where that growth came from. It's what I call the masking effect.
Okay, what's being masked?
The underlying health of the original business. Remember, Edge Autonomy, the drone company they bought, it contributed $49.5 million of that revenue.
Okay, so let's do the math here. $103.4 million in total revenue minus $49.5 million from the new guys. That means the legacy space business, the original Redwire, did about $53.9 million.
Exactly. And that means organic revenue, the business they already owned a year ago, actually struggled. It was down slightly year over year.
So all the growth came from the acquisition.
All of it. Now, management blamed production timing, which is a common excuse in the space industry.
Yeah.
Contracts get pushed to the right, launches get delayed. But it clearly shows that without buying Edge Autonomy, there wouldn't have been a growth story this quarter. The growth was bought, not built, organically.
And then we have to talk about profitability, or I should say, the lack thereof.
Right. The bottom line, net loss for the quarter was a negative $41.2 million. That is a big, big hole to be digging.
Even if you look at adjusted EBITDA, which is a friendlier metric that strips out a lot of the bad stuff like interest and taxes.
Even then, it was negative. Negative $2.6 million.
Although, to be fair to them, that EBITDA number was a significant improvement from the previous quarter, right? They are trending in the right direction.
They are. Operationally, they are getting better at controlling costs. But there was a specific nasty surprise in the numbers this quarter, an accounting charge called the inventory step-up.
Okay, let's unpack this because this is accounting jargon that actually hits the wallet and confuses a lot of investors. What is an inventory step-up? It sounds like an exercise routine.
It does, but it's much less healthy for your profit margins. When you buy a company like Redwire bought Edge Autonomy, accounting rules say you have to reevaluate all of their assets, including their inventory, to its current fair market value.
Explain that like I'm 5.
Okay. Imagine Edge Autonomy built a drone for a total cost of $10,000. That's the cost of the parts, the labor, everything. It sits on the shelf in their warehouse, valued on their books at $10,000. When Redwire buys the company, the accountants come in and say, actually, based on the current market, the fair value of that completed drone is $20,000. So they are forced to step up the value on the books from $10K to $20K before it's even sold.
Okay, so the inventory is suddenly worth more on the balance sheet. That sounds good, doesn't it?
It sounds good until you sell it. When Redwire then sold that drone to a customer in Q3, the cost of that good was recorded at that higher stepped-up price of $20,000, not the original $10,000 it actually cost to build it.
I see. So it artificially shrinks the profit margin on paper.
It crushes it. It makes it look like you're barely making any money on the sale. For Redwire, this resulted in an $11.2 million non-cash charge that hit their gross profit.
So it looks like they lost money on those sales, but it's really just an accounting adjustment. They didn't actually lose cash from the bank.
Precisely. It's a non-cash charge. It didn't burn actual dollars, but it makes the GAAP gross margin look terrible. It was only 16.3%. If you strip that accounting quirk out, their adjusted gross margin was 27.1%.
That is a huge difference, 16% versus 27%.
Yeah.
So the underlying business is actually much healthier than the headline net loss figure suggests.
It is. The headlines look much worse than the operational reality. But what about actual cash? Can they pay the bills? That's the real question.
Right. How much runway do they have?
They ended Q3 with $52.3 million in cash on the balance sheet, but their free cash flow is still negative. They are spending more than they are bringing in every quarter. They are burning cash to fuel this growth and integration.
But there was one very positive signal in the report, the book-to-bill ratio.
Yes, this is a key metric for any project-based business.
I love a good ratio. What's this one tell us?
It was 1.25x for the quarter. That means for every dollar of revenue they recognized or billed, they booked $1.25 in new orders.
So demand is outstripping their current execution. That's a good problem to have. It implies acceleration.
It does. They're bringing in work faster than they can finish it and bill for it. It's a leading indicator of future revenue growth. And their total backlog, which is all the signed contracts they haven't fulfilled yet, reached a record $355.6 million.
So the demand is clearly there. The problem is execution, profitability, and cash flow.
Exactly. They have plenty of work to do. They just need to manage their cash runway carefully so they can actually do it without going bankrupt first.
Speaking of all that work, let's move to Section 5, moats and moonshots. Because Redwire isn't just drones and satellites. They have some really wild, almost science fiction lottery tickets in their portfolio.
This is the stuff that gets the futurists and the long-term investors really excited. And let's start with biotech in space.
Space MD. This sounded like a gimmick to me at first, I have to admit. But the business case behind it is actually fascinating.
It really is. The core concept is growing pharmaceutical crystals in microgravity. It turns out that here on Earth, gravity interferes with crystal growth. It causes sedimentation and convection currents.
It basically pulls things down and stirs them up while the crystals are trying to form.
Right. In the microgravity environment of the space station, those forces are gone.
Yeah.
And as a result, you can grow crystals that are much larger and have a more perfect, pure structure than you could ever get on Earth.
And the aha moment for me was realizing this isn't just for a cool science experiment. It's about patents.
Correct. This is a business strategy for big pharma to bypass the dreaded patent cliff.
Walk me through that. This is the really clever business strategy part.
Okay. If a drug company has a blockbuster drug appeal that makes them billions a year that is about to lose its patent protection, generics are about to flood the market and completely destroy their profits.
They fall off the patent cliff.
But if they can use microgravity to create a new crystal form of that same drug form that is maybe more stable or dissolves better in the body, that new crystal form can be patented as a brand new product.
So they can extend their monopoly on that drug for another 20 years.
Exactly. It extends the revenue stream by years or even decades. That is worth billions and billions of dollars to these pharma companies. It's an arbitrage on physics and patent law.
That is devilishly clever. And Redwire provides the hardware to do this.
Yes. They have a piece of hardware called the Peel Box. It's a mini lab that flies on the ISS. They have already signed a royalty agreement with a company called Exasilibero Pharma. And this is key. It's a royalty deal. If that drug takes off, Redwire gets a cut of the sales, not just a one-time fee for renting the box.
Wow, that's huge upside potential. It turns them into a speculative biotech royalty play on top of everything else.
Right.
And then we have the moon. Actual construction on the lunar surface.
Project Mason. The logic here is pretty simple. If we are going to build a permanent base on the moon, we can't bring all our building materials from Earth. It's too heavy. It costs thousands of dollars per pound to launch anything into space.
So you have to use what's already there. In situ resource utilization.
Right. We have to build with what's there, which is regolith or moon dust.
But moon dust is horrible stuff. It's super fine, razor sharp, and it gets into everything. And you can't land a powerful rocket on it without blasting that dust everywhere at hypersonic speeds. It would essentially sandblast your own ship to pieces.
Which is why you need a landing pad, a solid surface. And Redwire is building the robotic tools to make one out of that dust. They have a grater called BASE, a compactor called PAST-T, and a microwave melter called M3LT.
M3LT.
Serious?
M3LT. M3LT. It uses powerful microwaves to melt the top layer of the moon dust, sintering it into a solid, glass-like surface. Essentially, they're creating lunar asphalt.
A 3D printed landing pad on the moon. That is incredible. And while that sounds very far off in the future, they are winning some massive infrastructure contracts today.
The big one is the SHIELD IDQ.
I saw that number and did a double take. $151 billion ceiling. That can't be right.
You have to be careful with that number. That's an IDIQ, indefinite delivery, indefinite quantity. The ceiling is $151 billion, and it's shared among many, many companies.
So it's a hunting license, not a guaranteed check. It's a hunting license. It doesn't mean Redwire gets $151 billion. It means they're pre-approved to bid on task orders that fall within that massive pot of money from the Missile Defense Agency.
But just being invited to that party is a huge deal, right?
It's a massive validation of their status as a prime. The Missile Defense Agency trusts them enough to let them bid at the big table, right alongside the Raytheons and the Lockheeds of the world. It gives them a seat at the table for the next decade of missile defense work.
Plus, they're still core to NASA's plans.
Oh, yeah. They are supplying the RSA solar arrays for the Lunar Gateway and the camera systems, the eyes, for the Orion spacecraft that will take astronauts back to the moon.
Okay, so we have combat drones, orbital drones, space drugs, and moon bulldozers. It sounds like an absolute dream portfolio. But Section 6 is where we have to wake up and talk about the risks, shareholder risks, because everything we just talked about comes with a cost.
And for Redwire, the primary cost of this rapid growth has been dilution, massive dilution. We talked about that roll-up strategy earlier. Well, buying half a dozen companies costs a lot of money.
And if you don't have the cash on hand, you pay for it by issuing stock.
Or you issue stock to raise the cash to do the deal. Either way, look at the share count. The weighted average shares outstanding went from 66.5 million a year ago to 145.7 million in Q3 2025.
Ouch. That's more than double. So if I owned 1% of the company last year, I own less than 0.5% now.
Essentially, yes. The pie got bigger because they have more revenue, but your individual slice of that pie got much, much thinner. This is the Dilution Engine. And it's not over. They just announced a $250 million at-the-market offering.
An ATM offering. That means they can just sell new shares into the open market whenever they need cash, right?
Whenever they want. It puts a constant, heavy cap on any stock price rally. Every time the stock starts to go up, there's a risk that the company will sell more shares, creating supply that pushes the price right back down.
It's a heavy anchor on the stock.
Yeah.
And then there are the internal operational headwinds. The 10Q mentions something called EAC adjustments. What is that?
Estimate at completion. In long-term, fixed-price government contracting, you have to estimate at the beginning how much a complex project will cost to complete.
Okay.
If you realize halfway through the project, this is way harder and more expensive than we thought, you have to take an immediate accounting charge for that expected future loss. You have to adjust your estimate at completion.
And how much did they miss by?
In the first 9 months of 2025, they had a negative impact of $29.9 million from these EAC adjustments. That tells me they're consistently struggling to bid these complex new prime contracts accurately.
So they might be winning contracts by bidding too low just to get the business, and then the shareholders end up eating the cost overruns.
That's a real risk. It suggests their project management and bidding processes are still immature. And then there was another red flag in the report, a note about material weaknesses.
That phrase always sounds scary.
This is the one that really scares institutional investors away. The company's own auditors flagged material weaknesses in their internal financial controls, specifically around IT general controls and the segregation of duties.
Segregation of duties, what does that mean?
It means that too few people have too much control and access over the accounting and financial reporting systems. In a good system, the person who can approve a payment can't also be the person who issues the payment.
It's a check and balance to prevent errors and fraud.
Exactly. It increases the risk of error or, in the worst case, fraud. Now, to be crystal clear, there is no evidence or allegation of fraud here whatsoever. But it shows that their back office systems, their corporate plumbing, haven't caught up with their rapid growth. They are a billion-dollar complexity company running with a small-cap accounting department.
They need to invest in the boring stuff, not just the cool new tech.
They do. And finally, you have the government factor, the eternal risk for any defense contractor.
The customer who could shut down for months at a time.
A U.S. government shutdown delayed several high-margin defense awards from being signed in Q4 2025. They got pushed into 2026. When your biggest customer is Uncle Sam, his political dysfunction becomes your revenue miss. You can have the best technology in the world, but if Congress can't pass a budget and closes the checkbook, you don't get paid.
So we have a very complex, very dynamic picture here. Let's move to Section 7, the final verdict. We need to synthesize all of this for the listener.
Right. Let's lay out the bull case and the bear case side by side.
Okay, the bull case seems to be, this is a unique beast. There's no other company quite like it. It's a pure play space plus defense hybrid. They have true vertical integration, their satellites talking to their drones. They're being validated by the most demanding customers in the world. Yes, DARPA and the literal army of Ukraine. And they have a quoted pipeline of $10 billion in opportunities they're chasing.
That is the bull case. If they execute on that vision, they become a mini Northrop Grumman, a new, agile, middle-market prime contractor. The potential is enormous.
And the bear case?
The bear case is that they are a dilution machine that is constantly funding its operations by printing new shares. They're still burning cash, they're overly reliant on one-time acquisitions for their headline growth, their accounting controls are messy, and they keep underestimating the costs on their most important contracts.
So if you had to put a single label on it, what is Redwire today?
I would call Redwire a speculative mid-market prime.
And the rating?
For our framework, it would be a speculative buy-hold.
Walk me through the reasoning behind that rating. Why not just a sell or a buy?
It's a buy if you believe in the long-term connected battle space thesis and you have a very high tolerance for risk and volatility. The strategic logic is sound. The future of defense is integrated air and space. They are skating to where the puck is going. But it's a hold for more cautious investors until management proves two things. One, can they consistently convert that $355 million backlog into profitable revenue without these surprise cost overruns? And two, can they stop the dilution? Can they get to free cash flow positive and stop printing new shares? Until the dilution stops, the stock price will always struggle to run.
It really is a prove-it moment for the management team. They've assembled all the pieces of the puzzle. Now they have to show they can put it together and make the machine run efficiently.
Exactly. The roll-up phase is over. That was phase one. Now they need to enter the operational excellence phase. They need to stop buying and start executing flawlessly.
Well, we're coming up on the hour. Let's head to the outro. We usually like to end with a provocative thought, something for the listener to mull over.
Okay. I want you to think about that orbital drone concept again. We are blurring the line between a satellite and an airplane with VLEO technology. At the same time, we're blurring the line between an observer and a striker with this connected AI network. Redwire is building the nervous system for this new reality.
So what's the question?
The question is this: are we looking at the definitive future of defense? A seamless, autonomous, intelligent web of machines that will grant an insurmountable advantage? Or are we just looking at a very expensive science experiment that works beautifully in a DARPA demo, but ultimately fails in the real-world messiness of bureaucracy, inter-service rivalry, and congressional budget cuts?
That is the multi-billion-dollar question, isn't it?
It is, and Redwire is betting the entire company that it's the future.
A fascinating deep dive into a company that is literally trying to build the future.
Yeah.
One moondust brick and one silent drone at a time. As always, remember that none of this is financial advice. You have to check your own risk tolerance before you decide to buy into the next space race.
Risk defined, portfolio protected.
Thanks for listening to Griffonomics. We'll see you on the next deep dive.